In this video, I'm going to show you a brand new strategy using LuxAlgo for ICT, SMC, and price action traders. Whether you're just starting out or already familiar with LuxAlgo, I'll guide you step by step through customizing these powerful indicators specifically for stock trading, though this strategy works equally well on any volatile asset. I'll also walk you through the tools we'll use, breaking everything down so it's easy to follow. And by the end, you'll have everything you need to apply this strategy yourself. By the way, I've put this strategy to the test 100 times on the Apple chart. By the end of this video, I'll share a full breakdown of my trading results. Alright, let's get into it. To learn all about this strategy, let's open TradingView and start with a clean chart. For the sake of this video, I'll be using the hourly Apple chart. This strategy uses just one indicator, and it's a premium one. To add it, click on the Indicators tab, search for LuxAlgo Price Action Concepts, and select it to apply it to your chart. By the way, this video isn't sponsored by LuxAlgo, but if you're not a member yet, make sure to use my special discount link to get up to 50% off. Plus, LuxAlgo offers a 30-day refund policy, so there's no risk in giving it a try. Now, let's customize the Price Action Concepts indicator so it's perfectly set up for this strategy. First, double-click on the indicator to open its settings. Let's start with the Market Structure section. Here, select only the Break of Structures labels and leave the length set to the default value of 5. For the Swing Market Structure labels, choose None. Next, enable the Show Strong and Weak Highs and Lows option by clicking the checkbox. Also, make sure to enable candle coloring by checking that box as well. Now, move on to the Volumetric Order Blocks section. Disable the Show Last option, as we won't use order blocks for this strategy. Scroll down to the Imbalance Concepts section. Enable this checkbox, then select Inverse Fair Value Gap. Set the mitigation method to close, leave the time frame on the default chart, and extend the imbalance by 200. The volatility threshold can stay at the default value of 0. To make the chart clearer, let's adjust the colors for the inverse FVGs. I recommend using a blue color for bullish fair value gaps and a purple color for bearish ones. Finally, scroll down to the General Styling section and set the internal label size to normal for better visibility. Before we dive into the trading rules, let's first explore the logic behind the built-in tools we're going to use for today's strategy. And let's start with the BOS labels. A break of structure, or BOS, is a trend continuation label. It appears when the price breaks a prior swing high during an uptrend, forming a new higher high, or breaks a prior swing low during a downtrend, forming a new lower low. Simply put, BOS labels help us identify when the current trend is continuing, giving us a clear picture of where the market is heading. Using these labels is crucial because they allow us to stay aligned with the market's momentum. For this strategy, the break of structure labels will serve as our second entry confirmation, ensuring we only take trades that align with the market's direction. Now, before we dive into inverse fair value gaps, let's quickly go over what a fair value gap is. An FVG is a market imbalance formed from a sequence of 3 candles where the outer candle wicks fail to overlap the central candle body. The range between these wicks highlights the fair value gap. For example, a bullish FVG forms when the low of the current candle is higher than the high of the candle 2 bars ago, creating a visible gap on the chart. Now that we understand FVGs, let's move on to inverse fair value gaps, which will serve as our first entry condition for this strategy. Specifically, we'll only use recently mitigated inverse fair value gaps. And here's how it works. When a bullish fair value gap is mitigated, meaning price trades back into the gap, it creates a bearish inverse fair value gap. This inverse gap becomes an area where we can expect price to retrace upward for a retest. The same concept applies to bearish fair value gaps, which turn into bullish inverse fair value gaps. This might sound a bit technical, but don't worry. It'll become crystal clear when we walk through the trading examples. Finally, let's talk about the strong and weak highs and lows. Strong and weak highs and lows highlight the maximum and minimum levels formed by medium-term price swings. The indicator uses trading volume to determine whether a swing high or low is considered strong or weak, and it displays this information directly on the chart. For this strategy, we'll use these levels to precisely define where to place our stop loss and take profit, ensuring both are aligned with the market structure. Now, on to the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably. Let's start with the rules for entering a buy trade. To take a buy trade, we need to ensure 2 key conditions are met. First, we need to spot a bearish inverse fair value gap located above the current price action. Once we identify it, we wait for the gap to be mitigated. This happens when a candlestick closes above the gap, causing the inverse fair value gap to disappear. That's our first entry condition. Looking at the chart, we can see this exact scenario happen within this candlestick. Perfect. Now that the first condition is met, let's move on to the second step. Next, we need a bullish break of structure label to appear. A candlestick later, there it is. The bullish BOS label has printed on the chart, confirming our second entry condition. With both conditions met, we're ready to open a buy trade. The entry point is at the close of the candlestick where the BOS label appeared. For the stop loss, we have two options. First, use the weak low highlighted by the indicator, or second, use the most recent swing low. My approach is to use the weak low if the stop loss distance isn't too large, but if the stop loss seems too far away, I'll use the current swing low instead. Now, for the take profit target, we'll use the strong high highlighted by the indicator. However, I always check the risk to reward ratio to decide whether to use the weak low or the recent swing low for setting my stop loss. If the trade offers at least a 1 to 1.2 risk to reward ratio using the weak low, I'll go with that. Otherwise, I'll use the most recent swing low instead. Once the trade is active, we simply wait for the price to reach our target. Watching the chart, we can see the price dipping slightly within our stop loss zone without hitting it. Then, it starts steadily moving in our favor and finally hits the target. This trade resulted in a 1 to 1.7 risk-reward ratio and captured a 5% price move, a strong result. Alright, now let's take a look at another buy trade example. First, we need to identify a bearish inverse fair value gap located above the current price action. Once we've spotted it, we wait for it to be mitigated. This happens when a candlestick closes above the gap, causing it to disappear. That's our first entry condition. With the first condition met, let's move on to the next step. By the way, you might notice a bullish inverse FVG appearing here, but we can ignore it since we only use bearish inverse FVGs as a condition for buy trades. Next, we're looking for a bullish break of structure label to confirm our entry. A few candlesticks later, we can see the BOS label print on the chart, confirming our second entry condition. Now that both conditions are met, it's time to open a buy trade. The entry point is at the close of the candlestick where the BOS label appears. For the stop loss, we again have two options. Use the weak low highlighted by the indicator or the most recent swing low. In this example, using the weak low places our stop loss 22% away from the entry point, which is far too large. Instead, we'll use the most recent swing low to keep the risk manageable. For the take profit target, we'll use the strong high identified by the indicator. Once the trade is active, it's just a matter of waiting for the price to reach our target. Watching the chart, we can see the price steadily move in our favor, and finally, it hits the target. This trade resulted in a 1 to 1.6 risk-reward ratio and captured a 4% price move, another solid gain. And the exact opposite is true for sell trades. To take a sell trade, we need to ensure two key conditions are met. First, we need to spot a bullish inverse fair value gap located below the current price action. Once we identify it, we wait for the gap to be mitigated. This happens when a candlestick closes below the gap, causing it to disappear. That's our first entry condition. Looking at the chart, we can see this happen clearly within this candlestick. Perfect. With the first condition met, let's move on to the second step. We're looking for a bearish break of structure label to confirm our entry. At the same time the FVG was mitigated, the bearish BOS label printed on the chart, confirming our second entry condition. With both conditions met, it's time to open a sell trade. The entry point is at the close of the candlestick where the BOS label appeared. For the stop loss, we have two options. We can either use the strong high highlighted by the indicator, or we can use the most recent swing high. My approach is to use the strong high if the stop loss distance isn't too large. But if the stop loss seems too far away, I'll use the current swing high instead. Now, for the take profit target, we'll use the weak low highlighted by the indicator. I always check the risk to reward ratio to decide which stop loss option to use. If the trade offers at least a 1 to 1.2 risk to reward ratio with the strong high, I'll go with that. Otherwise, I'll use the most recent swing high. Once the trade is active, we simply wait for the price to reach our target. Watching the chart, we can see the price moving sideways for a few candlesticks before it suddenly drops and finally hits the target. This trade resulted in a 1 to 1.8 risk-reward ratio and captured a 6.5% price move. An excellent performance. Alright, now let's go through another sell trade example. First, we need to identify a bullish inverse fair value gap located below the current price action. Looking at the chart, we can spot 4 bullish FVGs sitting below the current price action. However, we only need the one that's closest to the current price action, so we'll focus on that and wait for it to be mitigated. At this candlestick, the FVG is mitigated, meaning it has disappeared. That's our first condition met. Now, let's move on to the second step. We're looking for a bearish break of structure structure label to confirm our entry. A few candlesticks later, the bearish BOS label appears, signaling that it's time to open a sell trade. For the take profit target, we'll use the week low highlighted by the indicator. As always, I check the risk to reward ratio to decide which stop loss option to use. Remember, if the trade offers at least a 1 to 1.2 risk to reward ratio using the strong high, I'll go with that. But in this case, the stop loss would be too far away with the strong high, so instead, I'll use the most recent swing high. With the trade in play, all that's left is to wait for the price to reach our target. Watching the chart, we can see the price steadily moving in our favor, and finally, it hits the target. This trade resulted in a 1 to 1.7 risk-reward ratio and captured a 4% price move, another excellent performance. Okay, at the beginning of the video, I promised to show you the backtesting results, and now it's time to deliver on that promise. I've tested this strategy 100 times manually on the hourly Apple chart, and here are the results. I started with a $1,000 account balance. I use 10% of my account per trade, adjusting as my balance changes with each win or loss. For example, if I profit $100 on a trade, my new balance becomes $1,100, and I use 10% of this updated balance for the next trade. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.